know that this whole issue of the IMF report has become a talking point. Even Nigeria's parliament has added its voice, raising concerns as to whether or not there should be prescriptions from the IMF. Why is it an issue if the IMF is suggesting monetary tightening in Nigeria and possibly even a move to inflation targeting?
Well, I'm not sure that the issue is that the IMF is suggesting anything. We do welcome suggestions from the IMF. The issue is that the IMF has given advice, and we discussed this advice. We gave them very strong economic arguments for not taking the advice, and they went ahead and published it without giving our position. We do not believe that the Naira is overvalued. The IMF itself says we do have a robust current account position. We do not believe that at a time when oil price is going up and output is going up, we should be losing the value of our currency. We also do not think it makes sense, if the IMF is concerned about inflation, to ask a country that is import dependent to devalue its currency. We do have imported food components in our CPI, and we do import energy because our refineries are not working. So the advice given by the IMF, frankly, is not based on sound economic logic. Our exports are denominated in dollars, therefore the value of the Naira has no impact at all on the price of oil. And we have a highly inelastic demand for imports, which means we'll end up spending more money importing even when we devalue. We've put these arguments before the IMF. We don't think that devaluation is a solution. We do think that there are issues with trade policy, with opening up our economy to all sorts of goods. We think we need to build our refineries and stop importing petroleum products. We think we need to have a proper structural adjustment to reduce import dependence, and the IMF should talk more to trade issues and other structural reforms that have not been ongoing, rather than trying to compel or push the country to an unnecessary round of devaluation. As far as inflation is concerned and monetary tightening, yes.
Finish your sentence, Governor.
Well, as far as monetary tightening is concerned, we do not have any fundamental disagreement. But Lera, look at the money supply. We've had an accommodative monetary policy, but by how much has money supply increased? By how much has there been credit expansion to the private sector? And therefore, the link between monetary policy and inflation is at best tenuous. It is theoretical. The reality is that the bulk of inflation is being pushed by structural forces. So we do agree that we should tighten, but we think the IMF is a bit naive in its overestimation of the potency of monetary variables in the short term. The real issue is to address structural issues and to manage the exchange rate channel for transmission of of inflation.
Let's talk about the instruments available to you as governor of the central bank, and essentially with the monetary policy. There have been interest rates, obviously, that you've hiked recently, but there are also other things, for instance, such as the need to mop up excess Naira. In circulation, for instance, reports of about 48 billion Naira to be mopped up by the CBN through open market operations. Constant action in this regard by the CBN. What more can you do? What more are we going to see you do?
Well, there's a limit to how much the central bank can do. We can mop up money, which is what we do when we increase MPR, and we can increase the funding to WDAS if we find pressures on the foreign exchange market. That's about the only way we can manage liquidity. And we have started this. We started this in September. The reason we didn't start before September, and I've said this repeatedly, is that we needed liquidity in the banking system because we had no visibility on the resolution of the banking crisis. The M&A discussions had not progressed to a level at which we were comfortable that the banks had clear exits for their problems. The AMCOM bill had not been approved. Remember, we were going through legislation at the time when we had a sick president, then the president died, then we had constitutional reforms, we had Electoral Act. We had to wait for the AMCOM bill to be signed into law, for AMCOM to have a board, and for progress on M&As before we could take the risk of tightening liquidity in the banking system. This we made very clear to the IMF. We were not willing to add to the crisis in the banking industry by tightening liquidity. Once we were comfortable that the banks had a clear way out, we started the right thing and tightened liquidity.
Let's move beyond the IMF and their recommendations and talk about what we're likely to see happen this week. Lots of talk about mergers and acquisitions for Rescued Bank, and that we're likely to see finally memoranda of understanding as to some of the transactions underway. Are we likely to get clarity this week?
I think so. Certainly, the board of one bank has already approved the MOU. We do think at least 3 should approve before the end of this month. I think all the issues are more or less resolved. The last briefing I got suggested that there are one or two very minor issues, and these can be dealt with as conditions precedent to transaction implementation agreements. So my hope is that in the next week or two, we will be within target and get at least 4 banks to have signed MOUs. And then we will try to proceed with 2 more that have reached very, very advanced stages, which have 1 or 2 knotty issues we're trying to resolve. Once that is done, I think all the systemically important banks would have clearly signed MOUs and be on their way to TIAs.
I mean, without getting you to reveal too much, Governor, there have just been some questions raised as to the fact that how are these deals being valued by way of valuation of the banks? What is it that shareholders are expected to pay? How are these deals structured? Can you tell us more?
Well, I can tell you broad outlines. First of all, when a bank has negative capital, it's very difficult to talk about value. What we're trying to do is to negotiate with the buyers and see that the existing shareholders do not lose out completely, even though their net worth has been totally wiped out by the actions of previous managements and boards. Most of these banks are working on the assumption that we take in the capital of the bank to at least 0. Using Asset Management Corporation of Nigeria, and then they put in money and purchase a percentage of the bank, the rest being shared between AMCON and existing shareholders. Now, the sharing ratio between AMCON and existing shareholders depends, 1, on how much the bank has been able to raise from sale of its own non-performing loans, because if a bank has good collateral underlying its loans, then that is good recovery for existing shareholders. If it doesn't have collateral and AMCON has to fill the hole, then AMCON takes a larger share of existing shareholding than in the previous case. So you basically have a sharing formula, 1 between the new bank coming in and existing shareholders, and the second between AMCON and the shareholders of the distressed bank. But we do hope that the shareholders will leave with something. Obviously, it's not going to be anywhere near what they think they're going to get, and this has been driven by their own directors and by their own independent financial advisors as well. But we do hope they do understand that they really have lost their investment, and everything they get is the product of very hard negotiation by our advisors with the partners.
I think for some people, Governor, and just a brief answer on this one, is that there are concerns that what hasn't been taken into cognizance is the fact that some of these banks, despite what's happened in the past, still have an extensive branch network and a wide customer base from which to build the business on.
Yeah, they do have a wide customer base, and they have a branch network, and they have goodwill, and that's why even though they have negative shareholders funds, we're insisting that they're not totally worthless. That is the basis of the negotiation, isn't it? We're saying this is what you've got to gain if you take over this bank. So don't just look at book value. Look at the real potential value that you're going to get. And the banks work on synergies. They look at potential earnings, and they get something. That is the argument from an investment banking perspective.
And what about
otherwise they would get nothing?
And the suggestion, Governor, and the timetable that's been set, for instance, with the withdrawal of the CBN guarantee on interbank placements. Can you give us the targeted date? What's being bandied about is June. And if indeed this is the case, what happens to the rescued banks that really need this guarantee in order to raise money?
Well, we had said we would keep the guarantee in place until 30th June, and we're watching the progress made on M&As. Frankly, what we think is that if banks have gone into mergers and acquisition, the earlier we get the banks off CBN support, the better, because confidence to the market returns when investors and creditors are able to see that these banks can stand on their own feet without CBN guarantees. Now, we will not be precipitate. We considered at the last MPC extending the date of the guarantee, but we thought doing that would perhaps lead to some complacency. We want to put the parties under pressure to find a solution, and we'll wait for the next MPC and see how much progress has been made. If we need to extend it by a little while to make sure that the banks all get into a point where everybody has visibility on their books, then we'll do it. But at the moment, we're keeping to June 30.